All right, everybody. Happy Saturday. It is Saturday, February 10th. This is the review for really Friday, February 9th here at precisealgorithmtrading.com. And these are our automated trading systems. I don't think I put them in the right order, so we'll have to mess around with that while we're here. So this is the Dow futures for 6 months time, and we got a little pop back up on Friday and a little curl at the end. Looks like 2.9. I guess it was 2.8 and 2.9 created that pop up. So, and then you can see the trades there for Friday. So, then we go down here, and this is the Dow for from 11.9 of 22 until 2.9 of 24. And that's the net result of our trading in that trading system. We'll go back up here and we'll look at, this is the Russell 2000 from that 10.9 of 22 till Friday. And Friday's trades were positive. Some follow through from Thursday, it looks like. And then the NASDAQ, this is 6 months worth of trading. We've got this double pullback, which drive you crazy. But a nice little pop here, I think, on Friday. So 3 trades, 2 winners and 1 little loser. And then this is what that one looks like from October 9th of 22 until yesterday. So that's going well. I mean, it's going to go better when we get back up here. And let's go to the markets. Not that. No. This. All right. So this is our S&P 500 on a daily basis on the left and an hourly basis on the right. Markets have to unfold from the inside out. So something has to happen on the hourly chart to create it on the daily, if that makes sense, because it's the smaller time frame that makes the bigger time frame happen. So we are still walking up. We've broken this resistance level pretty clearly up here. So at this point, I'm wondering if we're just going to get a vertical move and a blow off top, which, is actually fine with me, but I think this thing's going to, when it ends, it's going to be ugly. So the good news is, we shouldn't be in anything that's that doesn't fit our system. So when that does happen, we'll just get a temporary drawdown in our account, and then everything should come right back just like it does every other time. Over on the right here, you can see where we've blown out above that level, and that's the first close I think I heard on the S&P over 5,000 in history. So don't quote me on that, but I think I heard that in the news. Not that it matters, but that will create some of this excitement and FOMO, fear of missing out, and the other things that come with moves in the market like that. So I also wanted to pull up the VIX. It's the daily VIX on the left with the daily S&P 500 on the right. We could make this just SPX, and I think it might be cleaner. So you can see here we've been in this sideways move on the VIX. This basically, I could draw a box around this, and it's been sideways, and the bands, the pink bands, have tightened in, and now we're actually still moving lower, it appears, which is helping push this higher. But again, back here, when this thing really when the VIX broke higher was this drawdown here. So, and you had that same thing going on for that whole meltdown period. The VIX was going higher here, and the price was going lower on the right hand side. Then the VIX went lower, came inside the Bollinger Bands, and the price went higher for a moment. And then the VIX went higher, and the price went lower on the S&P 500, or in the general market. And that went back and forth until we finally broke the cycle and went much lower. And now we're here. 12.93 I think was the close on Friday. So it's just a gauge of when basically things are getting one way or the other, as far as too complacent or too volatile. And let's get rid of that. And let's look at the Russell. We've broken out of this channel pretty clearly. That makes that a higher low. And the question is going to be, are we going to go on and make higher highs? So the Russell 2000 is small cap stocks, and the small caps need a lot of institutional buying or selling to make them move. So this is institutional buying, and they're not very liquid typically in the Russell 2000. They're small caps, so they're low volume stocks. So when they do move, it goes both directions. Like, this means institutions are pushing money into them pretty hard, and when they do roll over, when the institutions, they can't hide their footprints because they have to sell, and they got to do it in big swats. And the point is that when they do that, they're already low volume stocks, so that means the institutions are like creating this massive buying or selling, which is what tends to move these markets, which is why the Russell 2000 moves first typically. But this is pretty bullish, and that's a bull flag that's broken higher, at least for now, above the channel line there. Here's the Dow. Looks an awful lot like the S&P 500. We're at 38,979. Been wondering if we're going to hit 40,000 in this most recent move. Looking for the $ DJI. There it is. Nope. There. So that's the official 38,783. Was the high, it looks like, with a close at 38,671. And the NASDAQ, the one that's really pushing everything. And that's pretty much the same story. It's pushed way up into the above area here. And boy, you sure would think it couldn't go on forever. So what's the weekly look like? Pushed out way above the top. So let's flip that back and look at oil. So oil's pushed back, and now it's pushing higher. The actual USO exchange traded fund is what I'm in. And we're really just on for the ride for this one. So this alert right here is just for me to, this is the hourly chart, and if it would breach this 30 period moving average over here, I'd get an alert on my phone, and I could check it at any point in time and see if, if I should be moving a stop, because this position is up in value. So that's the way I tend to treat these things. I could just go off the daily chart and be done with it, but once I get in profit, this is where I start to watch the hourly chart on the 30 period moving average, because what I don't want to do is have this happen where it falls off, big time, and just give all the profit back. And gold. Let's look at gold. I don't think it's doing much. It's pretty much just walking sideways. We got to move below the 30 period moving average on Friday. And I could pull the stop up to that low right there, and I just may before the end of the weekend. But I'm not terrible down here either until this thing really was to take off. Then I'd start tracking it off the hourly chart on the right. All right. I think that's enough of that stuff for today. Looks like this is the Bitcoin strategy ETF, and got a buy signal the other day, and it's actually taken off nicely here. So I am going to start tracking it also off the hourly chart, because it's already moved well into my favor. So if you guys follow along over here, and you can slow this down, but these are positions that I'm active in. Not this one. That's a weird one. That's happened a long time ago, and it's just zeroed out. So, but if you wanted to look at and see, follow along with your own charts, this would be something where you could do it. Carvana's been a fun one here lately. I'm watching the earnings over here. I don't want it to get too close. I will get out before earnings happens, and I'll be tracking it up here off of the 30 period moving average on the daily, because we are already positive. So, and then the other day, this is interesting. The IWM is the Russell 2000. It's really looking for this pullback to happen, and it still could. And if it does, then that's where I'm going to want to get it in, because it's already run away from me. So, because it'd be nice to be on the train before it leaves the station, but if it just takes off from here, then I'm just going to miss that move, and I'll just have to stick with the stocks that I'm in. So, let's go to this. I threw this on here because Alan Greenspan created I think he coined the phrase irrational exuberance back in the 80s with the dot-com boom. So, I just wonder if that's a little bit of what we're seeing right now, although there's some argument to be made for the reindustrialization going on in America, and it's creating some of the opportunities that are going on right now, along with the artificial intelligence stuff, plus Bitcoin and some of those types of things. That there's just new stuff going on in the market all the time lately. Let's put in the bullish percent index, or the term bullish right in there, and we'll look at this. Let's look at real estate since we're here. Real estate's in a column of O's. Just curious. Industrials flip back to a column of X's on Friday. That's interesting. The NYA up 0.98%. The transports didn't move. The NASDAQ up 1.06%. The SPX up 0.3%. The NDX 1.39% up. And I did that in the wrong order. And here's the OEX up 1.59%. So, again, actually the bullish percent indexes for the most part are actually showing that too, except they're in columns of O's, except for the Dow. And we'll just keep an eye on it. So until next time, have a great weekend and stay safe.